Hi, everyone. This is Anshul, and this is the June 15 podcast. And today we have Steve Piatkowski. He is the AVP of Accounting and Tax Lending at the Live Oak Bank in North Carolina. He is an SBA lending expert. He specializes in funding opportunities for CPA firms. And over the years, he has funded several acquisitions, several opportunities for accounting firms, and he is one of the most influential people in the space. And I'm looking forward to talking to him. Steve, thank you for being with us.
Yeah, absolutely. I appreciate that introduction. That was setting the expectations high for me, but I really appreciate it.
So, Steve, tell me more about your background and how did you come to specialize in funding opportunities for accounting firms? That's quite a niche.
Yeah. So, I mean, when being an SBA lender is not something somebody typically goes to college to do with their career, but I mean, it kind of just fell into my lap. And I started at Live Oak in 2019, so right before COVID hit. And I have a history selling local craft beer. So Live Oak also has a vertical where we lend to breweries and wineries throughout the country. So I had a connection there, and I was able to kind of get my foot in the door with servicing our wine and craft beverage accounts. And Live Oak, I mean, it's a growing bank, so there's always like great opportunity for internal growth. So after about a year and a half working with the wine and brewery industry, I moved into an underwriting position. And at Live Oak, you don't really get to choose where you get to go to be an underwriter. It's just wherever the vacancy is, they kind of fill you in. And luckily enough, I landed on the professional services team, which includes tax and accounting, but we also, that also includes our insurance team, investment advisory, CPA, and law practices. So I spent about a year and a half underwriting for those industries, and the tax and accounting and insurance space, I just really enjoyed the transaction piece of it. The industries are really strong because of the reoccurring revenue, as you know. And fast forward about a year and a half later, there was an opportunity to move into a loan officer position for the tax and accounting firms. And I interviewed for the job and ended up getting it.
Awesome.
Yeah.
So tell me more about, in our last call, you mentioned a lending platform for Live Oak. Tell
Yeah.
me more about what that is.
So, I mean, Live Oak, so we specialize in lending to small businesses across the United States. And Live Oak is kind of unique because we're verticalized. So we have about, I want to say it's like 30 to 35 industries that we have experts in. So tax and accounting is one of them. Our wine and craft beverage industry is another one. But so like what I do specifically is I just deal with tax and accounting, individuals who are looking for financing. So the financing ranges anything from an acquisition where a first-time, business owner is looking for financing to purchase a tax and accounting firm. Then we also do expansion loans, which are existing business owners looking to expand their practice by purchasing another one. But then we also do just the traditional working capital loans, refinancing of debt, commercial real estate if needed, partner buyouts, partner buy-ins. And we utilize the SBA as our lending platform. So, the SBA is designed to get, financing into small business owners' hands, as easy as possible. So like what I do, about 90% of our loans are through the SBA, but then we also have a conventional product as well.
Okay, awesome. So what's the average loan size, right? Is there like an average size or?
Yeah, so I would say it's probably around the $1 million mark. So I mean, we can do loans as small as $10,000 if needed, but we can also do loans as high as $5 million through the SBA program. And we get requests, that fall right within that range, daily. But overall, I would say it's about $1 million.
Okay. I want to talk more about M&A.
Yeah,
That's a hot topic right now.
for sure.
What are you seeing in M&A in terms of trends? Like who are the primary buyers and who are the
Yeah.
primary sellers? Tell
So,
me more
so
about that.
So yeah, it's an interesting time. I mean, we have a lot of people who are looking to retire, and there's also a good amount of younger individuals who are highly motivated, who are more technology based, who are looking to purchase, some of these older mom and pop type of firms who haven't really made many updates over the years just because, things have worked for them in the past. So there's no reason to change it. But then, you get a younger guy in who's more focused on the technology side, is looking to make updates like, taking a firm, virtual, which seems to be a nice little trend now, which is great because, you can be living in New York and purchase, somebody who operates their firm in California. So it gives our buyers a lot more flexibility as far as the practices that they're looking to purchase. But I mean, in the tax and accounting space, new trends are popping up every day. And one of the cool things about my job is, I'm on the phone with CPAs and tax and accounting individuals all the time. So it's kind of cool to get a firsthand experience and hear it from them directly.
Okay. Private equity, right? That's I don't. That's what everyone's talking about. So I want to talk to you about that as well. How's private equity changing the M&A space?
So yeah, two things that I feel like I talk about on a daily basis are IA and private equity. So private equity is definitely getting involved in the tax and accounting space. The individuals that we're helping, private equity is not necessarily impacted by them because private equity is looking at these like massive firms that are doing, $10 to $20 million in revenue. I think, there's still more to be determined as far as how they're going to impact the industry. But, private equity, they want to make money, and tax and accounting is recurring revenue, right? Death and taxes, right? So that's like the two things that are guaranteed in life. So I think there's still more to be determined on how they're going to impact things. But I can see in the future them driving up multiples, but I think it's still more to learn about how they're going to impact the industry. I think in a year from now, if we have this conversation, I can give you a more definitive answer. But we're still learning on the impacts that we're going to see.
So we will have another conversation for sure. But so you talked about multiples. Like, what are the multiples right now? And it has. So I know you said it's too early to say if private equities had any major impact, but my mind directly goes to multiples, right? Have they changed it, or do you think they'll change it? Like,
I think so. Like, I also have an insurance background, so I was before I moved into this role. I helped out our insurance team. I was an inside, loan officer. So basically, what that means is if our insurance team was traveling at conferences or visiting customers, I was kind of in the background to make sure loans kept moving forward. Private equity got involved in the insurance space, years ago, and there was a huge impact. Multiples went from like 1.5 to 2.5 times. So they drove up multiples in that space, which I foresee that happening in tax and accounting. But right now, our multiples are still pretty much around anywhere between 1 to 1.4-ish. And that's based off of revenue. But we're starting to see virtual practices, those multiples go up a little bit just because, the cash flow is there because, the little overhead expenses, you're not paying for a lease location. Staff are kind of scattered through all throughout the country and sometimes overseas. So there's little overhead, which, at the end of the day, that brings more money into the owner's pocket. So, those multiples are going up a little bit.
Okay. And we talked about this on our last call. Like, what's the end game for private equity? Because they're not in anything for really long. They're in it to fix it or turn it around and then
they move on to something else. Yeah. That's a great question, and I think that's why so many people. I think that's why private equity is a topic on so many people's minds, is because nobody really knows that answer. But like I mentioned earlier, a year from now, we'll probably have a better idea of what their end game is. But for me, it's it's just business as usual. My goal is to assist small business owners to help grow their business. And I don't spend too much of my time focused on private equity or, stressing out about it, because I just control what I can control. And my main obligation is to help small business owners achieve, their goals of growth or, whatever else they're looking to achieve.
No, makes sense. I mean, I just find it interesting because I'm new to the accounting world, right? I've been in this industry for 2 years, and
Mhm.
I've worked with companies that have taken private equity funding in other industries like tech, healthcare, consumer goods, and it changes the culture a bit.
Oh,
Like the culture, yeah.
100%,
So
100%. I mean, I don't necessarily think it's a good thing. I mean, I think it's a good thing for sellers because, their payout could be higher than what it would be, um, just getting traditional financing. But I mean, to your point, yeah, I mean, like private equity is not really so much concerned about the culture or their employees' happiness. Their main obligation is to make as much money as they can.
yeah.
So I don't foresee it being a good thing, but again, time will tell.
Yeah, for me, it's a bit bittersweet because one thing that's going to benefit me, my business personally, is
Yeah,
private equity is looking to bring efficiencies. They're looking to increase margins.
yeah,
So for somebody like me who sets up offices in India, that's a big opportunity because it's a lot easier to sell building a global team to a private equity firm than to an accounting firm.
correct.
So, but then on the other side, as you said, like the the employee employer equation that sort of gets messed up.
Yeah,
Um, and given that there's already a talent shortage, I don't know how it will turn out. You're right. The time will tell. But that's something I see on the negative side because we already have a talent shortage, and
for sure.
I don't know how private equity is going to help or hurt that.
Yeah, I mean, the this private equity could potentially struggle with the same thing that our small business owners are struggling with, which is hiring individuals who are either CPAs or just are able to complete someone's individual tax return. And I think if private equity gets involved and purchases, let's just say my firm, that could push me out. So
Mm.
I think there could they could start facing the same struggles that our small business owners face. But
Yeah, I know, I
who
know.
knows?
I know. So let's talk about talent shortages, right? That's another big thing. That's one of the biggest pain points right now in the accounting world. How's that affecting your world? How is that affecting people that you work with?
Yeah, so I mean, I deal with a lot of successful business owners who will just acquire a small firm because they have a reliable staff. They don't necessarily need the revenue, but they're purchasing for the staff. But then there's also the overseas in outsourcing. So, a lot of our clients are depending on that these days, which is great because it's a little bit less expensive than hiring internally, or like internally as in the United States. Um, so yeah, I mean, talent shortage is definitely a major concern, and that's, again, I guess we can add that to the list of things that I discuss with business owners on a daily basis as well.
Yeah, we'll come back to the global team component. I have like a million questions on that. But the talent shortage part, like, is that bringing in a certain kind of buyer, or is that motivating a certain kind of seller? So you mentioned some acquisitions now are just talent
Yeah,
acquisitions,
and
but yeah.
well, I was just going to say, on the flip side, some individuals who are business owners, the turnover is pretty consistent because let's be honest, tax and accounting is not the sexiest industry to get into if you're a younger individual. Um, but yeah, some sellers are selling strictly because they don't want to deal with the headaches of constantly hiring. And they during tax season, it's a grind, and if you don't have a reliable staff, then that owner is taking on that responsibility. I speak to some business owners who hardly see their wife and kids from January to April, and that doing that for 10-20 years, that takes a toll on the body, and some people, they just don't, they're just kind of tired of it. um, so yeah, I mean, you have people buying for staff and then sellers selling because of the staffing issues.
That just makes me sad,
Oh yeah,
especially for sellers. Like, it's not the right reason to sell. And one thing you mentioned was constantly hiring. My first client, right, who wanted to do their thing in India, when I asked them, like, why do you want to set up something in India? That's what they said, that
yeah.
always hiring, and there's just we've started to see the same resumes again and again. We have had positions that have been vacant for months to an end,
Yeah.
and like instead of thinking about, all right, how do I grow my firm, how do I, increase prices or anything, all of my time and energy is going towards figuring out,
Hiring.
do we have the staff to service the clients we
Yep.
have. So that constant hiring, I can't even imagine the kind of headache that brings.
Yeah, I mean, it's. I mean, as a business owner, you deal with a lot of stresses, and I think hiring reliable, dependent staff shouldn't be one of them. And I agree. I mean, it is unfortunate that sellers are willing to sell just because they still could have a couple years left in them, but just the staffing frustrations is enough to drive someone crazy. So I sympathize with them, and I understand why they would want to do it.
Yeah. And you also mentioned like people are busy, right? Like the busy season is busy. But so I'm new, right? So I feel like that's not the only reason, because like when I was in business school, right? Consulting firms like all the big MBB, McKinsey, Bain, they would come and they would tell you that you're not going to have a life, and we were still like, we don't want a life, we just want a job with you. The investment bankers would come, they'd be like, yeah, you're not going to have a life. So I think it's more than just the fact that, like, I worked for a tech firm before I got into all of this.
Mhm.
Like every season was busy season, but I think then people get paid more, so they're okay selling their soul to the
Yeah,
employer.
yeah, yeah.
But with accounting, the business models are just outdated, so they don't allow them to pay their employees as much. So
Correct.
I think
I mean,
that's what the main problem is.
well, and I think another issue is, you have some business owners who have been, own their business for a number of years, and they have a really loyal client base, and they need to raise their fees, but they just don't want to, because obviously, if you raise your fees, you can pay your staff more, but then they have the fear of losing a chunk of their customers because of the fee increase. But I mean, it's a necessary evil. Like it has to happen if you want to be successful.
It does. And I mean, as I say this, I'm a little scared my accountant's going to see this and raise my fees. But I think I was reading somewhere that fees, like accountants haven't increased their fees in like 10 years or something. That's
Yeah,
just insane. Like
yeah, yeah. I
you're
mean,
basically losing money because of inflation and everything.
exactly. Yeah, I was going to mention. I mean, the cost of everything has gone up, and I mean, it only makes sense for it to also trickle into the tax and accounting world. And also taxes are a requirement, whether they're
Yeah.
individual taxes or business taxes. So you're going to have to pay somebody to do them, unless you want to do them yourself. Um, so I mean, people will pay. It's everything. People don't like change, but there's always an adjustment period. Um, and it just needs to happen.
Yeah. I completely agree. So I want to talk about global teams. So you mentioned a bit about offshoring, how offshoring is happening a lot. How has building a global team or offshoring, has that impacted what you do, or like if you're
No,
looking at like loan products or something and you see a company's offshoring, like how does that change, like help or hurt your business?
if anything, I mean, it doesn't really impact much on our end. So like whenever we're doing a potential loan for somebody, we're not just looking at we're looking at a number of things. So we're looking at the individual, like we want to know about their personal character. We want to know about their history, but then we also ask about, if they have an existing business, their current staff makeup, and then the selling in company staff makeup. Me personally, I like to see staffing overseas, because individuals overseas, they tend to be more loyal. They work harder. It's great to, I mean, there is a time change, which can be a struggle, but if you have a Dropbox and somebody uploads a bunch of tax returns, and then you leave for the night, you come in the morning, and those returns are done already. So I mean, I think it's a plus for sure. And then we all know the American individual. They want to get paid a lot of money, and they don't really want to work too hard. But I think overseas, I mean, the motivation is a little bit different. So there's definitely some benefit to that.
That's, you made so many great points, right? So I obviously am a firm believer of building a global team.
Yeah.
The only thing that I do different is I just focus on direct ownership. That you own everything. You own your infrastructure overseas. You own
Mhm.
your people. You own the processes, and you own the results. And when that happens, you get better results, better
For sure.
quality work. Um, but so on one of my podcast episodes, right, somebody said we were talking about India. We were talking about why is it that you're finding better employees in India as opposed to the rest of the world. And he said something very interesting. India is going through what the US went through after World War II.
Mm.
Like everyone's hungry to succeed.
Yeah.
Everyone's hungry to just build, to grow. And you can like every time I travel to India, I see that energy around me, and it's infectious, right? In a good way. Where everyone's like, all right, you hear about startups, you hear about people doing great things. So I think that culture that US had after the World War II, you see that in India, and that translates into a lot of things you said. More loyalty, like hard work, um,
But then you
and
also get it. You also get it at a cheaper cost as well. So
oh, absolutely, like half the price, right?
yeah.
So I think that's a very big bonus. I think it allows a lot of smaller accounting firms to take that risk.
Oh,
If
yeah.
they're not going there for to save money, they're going there for talent efficiencies. But the fact that it's cheaper, it just enables them that all right, this makes it easier for me to sell it to my banker
Yeah.
or
And I, and I,
the
and I,
partners.
and I think there is a little bit of a stigma surrounding staffing overseas.
Oh, tell me
Um,
about it.
but yeah, but I mean, I think that's just something with time will kind of go away, hopefully. But I don't know. I see,
Um,
I see it as a positive, and that is a question. So, like, and when I'm looking at financials, when I'm asking about the staff makeup, like a lot of business owners will have it as like contract labor listed on their expense line, and I ask about it, and they'll tell me they staff overseas, and I usually I ask like how that's going for them, and a lot of them say I should have done it years ago. It's a game changer. So I'm all for it, and it doesn't have a negative, like when we're looking at it, like we don't see it as a negative thing. I like it personally because I know of like the loyalty that those individuals overseas bring to the business, and the hard work. So like it's almost like they're more reliable than um, you know just American employees.
so you do see a lot of benefits with like an India team or an overseas team like Philippines or wherever. You mentioned something about the time zone, right? That I talk to like my clients, my prospective clients, a lot about it. People worry a lot about time zone differences, and I tell them that like yes, the first 2 years it's going to be a challenge, right? Because especially if you haven't worked with anyone overseas, there's time zone challenges,
Yeah,
there's cultural issues, but like there's this concept of follow the sun model, right? Once you have found people, once you have the processes set in, as you said, you upload work when you're turning off your computer for the day, and when you wake up, like that work's done, and
works done.
that's like one of the best feelings in the world. It's almost like magic, right? So it takes a couple of years to get there, but once you do, oh man, it is
Yeah,
the
it
best.
pays off for sure. Yeah, I mean, it gives you peace of mind as well. I mean, what's better than peace of mind?
Oh yeah. And you also mentioned stigma, right? I think so. I encounter that stigma on a daily basis when I talk to people, like even people who are like, I believe this. I believe that this is the right thing for my firm. They're worried. They're worried. What are my clients going to say? What are my employees going to think? Like, are they going to think I'm shipping with their jobs overseas? So there's a lot of that stigma exists. It's part because of bad experiences. Like I don't know, early 2000s. Do you remember those call center calls?
Oh yeah,
Those
for,
horrendous calls. Like so, part of it stems from that. Part of it just like fear. That's the fear of the unknown.
yeah. But I mean that has improved. Like the call center aspect of it. And I had another point I was going to mention, but I forgot. Maybe it'll come back to me. But we can keep on moving.
No, no. I think you're right. It is improving. It is getting better, and as like people like you and me, as we talk about it openly, right? We talk about, hey, there's a stigma. Hey, this is working for XYZ. Here's why it could not work. I think that education, like which is really the prime motivation for this
Yeah,
podcast, is to bring all of these issues out in the open. I think that's going to help. And as people like you who are in influential positions who'll say that, hey, offshoring is good, or building a team is good. I think people like you will play a big role in that mindset shift.
Yeah, no, and I agree. And it's usually, as I mentioned, a conversation that happens on most, if not all, of my calls is, if someone calls with staffing issues, I'm like, well, have you thought about going overseas? And they'll say, oh yeah, we thought about it. I don't really like the idea of it. I'm like, try it. I mean, it's worth the investment.
Well, thank you for that. So I also want to talk, like, last question on the global team setup is, I want to get your opinion on direct ownership, right? So we talked a bit about, so there's two ways to go overseas. You can work with an outsourcing company and you can give them tax returns, or they give you shared or dedicated resources and you get the work done. And then
Yeah.
the second is what I do, is just direct ownership, that hey, you own your own office in India. So yes, it comes with liabilities, but then it also comes with better results. Do you have any thoughts on that? Like, any pros and cons, anything that comes to mind? I would love to hear your opinion on
So,
like.
I attend a lot of conferences in the tax and accounting space, and there are, staffing businesses that are always trying to get people to kind of, work with them to hire overseas. But I think like what you do is extremely interesting. If you can own your own business overseas, like you're fully responsible for it. And I love that model because like you control, just the results, and you can't, have somebody to kind of blame, I guess. Like it's all on you. And a lot of people in the tax and accounting space are type A personalities and they want control. And I think what you do is a way to eliminate, that concern for them.
Oh, I really like, so I'm going to use something you said for my pitch. You talked about blame, right? I think I've been trying to figure out a way on how to explain direct ownership's benefits. So that's a very good way to say that, hey, if you have a team in India and you don't get the results, like, who do you blame? If
Yeah.
there's a partner that you blame, then it's not direct ownership. But if it's you who is to blame, then
It's
that's direct ownership.
it's so
So
much easier to point the finger at somebody else. But if you're owning your own, India or business in India, like it's on you. And like, if you want to succeed, then you got to put in the hours to make it work. And I think there will be an adjustment because it's a newer concept. But you get what you put into it. So if things aren't going well, then it's your own fault.
I really like that example. So thank you for that.
Yeah, you're welcome. I'm
Uh,
here to help.
then, yeah. Then I want to talk about just debt. Like, one of the biggest things that when I talk to prospects, right? Like, setting up your own office in India, like with direct ownership, it could cost somewhere between like $50,000 to all the way up to 500,000. I mean, and then depending on the size of the team, if you want to set up a 500 team office, obviously
Yeah,
that's going
yeah.
to cost more. But is there a way, like, is there like a loan product or something that these firms can utilize who want to do this, but they're like, we would, we would love some money, like a loan for this. Is
Yeah,
that
absolutely.
possible?
So one of the loans that we do are working capital loans. So like with an SBA loan, it has to, we have to give it to a business in the U.S. But if it's for working capital, they can use that working capital to invest in, technology, employees, or setting up some sort of overseas operation. So with the loan amounts in between, $50,000 and $500,000, those are eligible for working capital loans. And we have a program here at Live Oak. It's called our Express program. And the basically the premise behind that program is to get deals from start to finish done in 2 weeks, and especially a working capital loan where there are no other individuals involved. So we're not doing a business valuation on a selling business. The fees are really inexpensive. The underwriting process is really quick, and from start to finish about 2 weeks.
That is outstanding, right? And like, what's like, do I need a collateral for those loans? Like, is how would that?
So not to bore all of our listeners, but the SBA, they updated their rules around small loans in November of 2023. And we took that rule change and we created a whole new team at Live Oak to fund small opportunities. So with the rule change, there is no collateral associated with it. So We do file the best available lien position on business assets, but in the tax and accounting space, it's all intangible, so it really doesn't mean much at all. So we're not going to file a lien on your personal residence or your automobiles. The individual who is applying for the loan needs to personally guarantee it, but that's standard for any bank you go to. But to answer your collateral question, there's hardly any collateral that's involved.
Okay, so it sounds like a cash flow. It's like based on cash flow, right?
Yeah.
If you can
Yeah, yeah.
demonstrate cash flow from the opportunity,
Exactly. So we're
get.
not going to just say yes to everybody that applies. So we're a cash flow lender. So the first thing that we look at is the cash flow of the individual's practice. So if there's enough EBITDA in the business to repay back the loan over a 10-year term, we're willing to do it as long as that individual doesn't have a history of bankruptcy or foreclosure, and they kind of pass just like our personal character test. If the business can support the debt, then we're willing to move forward.
And what about interest rates? Like I know it depends on each person's
Yeah.
profile, each firm's profile, but like, do you have like a range or something?
Yeah, so we do our pricing off of the Wall Street Journal prime rate. That's currently at 8.5, and then there's a spread that's put on top of that. So as you mentioned, the spread is, the range is it's gonna vary the range. So like we don't control Wall Street Journal prime. That's what the Fed controls, but we do control the spread, and the spread is based on the loan amount, the individual's tax return. The individual's the loan amount, the debt service coverage, so how well the business can repay back the debt, and the individual's personal credit score. So if all three of those things check out, you'd be looking at a range of anywhere between 12 to 13%.
That's not bad.
And that would be on a variable rate. So if Wall Street Journal prime drops, which it's supposed to, then your rate drops as well.
Oh, I'm waiting for rates to drop, man. I took a variable rate mortgage just before all of this, and
I don't have a crystal ball, but my expectation is that it's going to stay at 8.5 for the remainder of the year, and we'll probably see a drop, hopefully at the first quarter of next year. But who knows? I don't think it's going up, which is good.
That's big, Rick. If it goes up, then I'm gonna have to do like a podcast every day to just keep up.
Well, yeah, and don't hold me to that, because who knows?
I know. It's just a fun discussion, right?
I don't want people angry with me if it goes up to 8.75 tomorrow or something.
So those are all the questions I had. One last question, Steve. Anything else you would want to talk about? Anything else you want to highlight about Live Oak, about the lending platform, about how you help small businesses?
Like as I mentioned at the beginning of the podcast, Live Oak is unique because we're verticalized. So I deal with tax and accounting firms all day, every day, and that's solely what I do. So I understand the industry. Live Oak, we're the nation's largest SBA lender. So this is not something that just kind of kicked off last week. Live Oak believes that we should treat every customer like the only customer. And what we do here, I think we're the best in the country at it, and we lend to all 50 states. But we're here as a resource, and we're not commission-based loan officers. So our ultimate goal is to do deals that make sense for an individual and for Live Oak. We're not going to do a bad loan just to get commission on it. We want to make sure that we're setting our individual customers up for success, for the future, and for the foreseeable future, essentially.
Great. Well, thank you so much, Steve. To all the listeners, if you're looking for funding for your accounting firm, maybe for acquiring a firm, acquisition, setting up an India office, or just working capital loan, Steve is the guy. Even if you have questions, anything, right? Feel free to reach out to him.
Yeah, absolutely. I have a number of individuals that I've been working with for years who are looking to acquire businesses, and even if they don't have a target in mind, I'm always happy to hop on a call and just kind of bounce ideas off of each other. And if the goal is, if you want to purchase a business or a tax and accounting firm in the next year or so, the earlier you start, the better. And I'm happy to hop on a call with anybody.
Thank you, Steve.